Hey guys, Crypto Dice here and welcome to my channel where we discuss the world of crypto. As we all know, digital assets are taking over the financial markets by storm. And in this video, we're going to explore a strategy that can help us navigate the ups and downs of these crypto markets. And it's called dollar cost averaging. So if you're new to investing in crypto or just looking for a smarter way to approach it, you won't want to miss this video. Stay till the end where I'll show you my DCA strategy, where I'm buying and what I'm buying. But before we jump in, make sure you smash the like button and subscribe to the channel for more content like this. And as always, remember that I'm not a financial advisor in any shape or form. So please do your own research and due diligence when it comes to investing in any market sector or asset. When it comes to dollar cost averaging, there is a narrative floating around. Is it for me, or I'm going to wait for a better entry point? With that being said, people that wait for the perfect dip usually never end up buying. And if they do it in the wrong time where their emotions influence their decisions. I would look at 4 things when it comes to dollar cost averaging: when, where, what, and how much. But before we discuss those 4 points, we need to understand what dollar cost averaging is it for us, and can we utilize it in our advantage for building long-term wealth. Dollar cost averaging, or DCA, is a less measured investment plan that helps investors eliminate emotion-based decisions. Here, the investor looks to mitigate the effect of price volatility by spreading purchases across predefined intervals. Instead of investing a lump sum in a certain asset class, the investor chooses to invest a fixed amount either weekly, monthly, or bi-weekly basis. This is done regardless of the changes in the prices. Think of dollar cost averaging as a variable means of navigating a volatile cryptocurrency market without having a gauge of best entry point. Since the capital is spread across predefined intervals, the strategy tends to smoothen your purchases price over the duration of the investment. So keep that in mind. This is a lot better than investing a lump sum at the peak price. In essence, we can say that dollar cost averaging is a sustainable investment strategy for beginners or for individuals who do not want to burden themselves with the technical aspects of market analysis. So, dollar cost averaging is ideal for long-term investments. Remember that, not short-term. When I'm looking at dollar cost averaging, I'm looking anywhere from 2 to 6 years. The goal is to stick within an investment cycle where a fixed amount is consistently invested in one particular asset. There is no room for doubt, greed, or fear associated with a short-term investment strategy. It is also worth mentioning that dollar cost averaging is more effective in bear market. We are currently in a bear market. A lot of people would think the bull run has started, but yet I have not seen a 30 to 40% drop since we had this pump. Remember, I've been in cryptocurrency since of December of 2016, and I've seen this over and over and over again. While the most investors are too afraid to buy, always wondering if they're too early or too late to the game, your dollar cost averaging plan would provide you with the investment framework for buying the dip. Now that you know the fundamentals of dollar cost averaging, let's take a look at the possible effects of this strategy in various investment scenarios. So when it comes to our first point, when a lot of people like to look at a lot of different charts. This particular chart is called Bitcoin Rainbow Price Chart on a log scale. This chart illustrates the existence of Bitcoin all the way back from 2009 all the way to the present point. These lines right here, they're the halvings. A lot of people would say, hey, I would start investing after the halving. Usually after the halvings, the price tends to go up. A lot of people base it on the yellow line, stating that there were dollar cost average up here and lump sum down here. Me in particular, I do not look at these charts. I'm not a charts guy. I am a long-term investment. If you asked me, when should I start? My first answer to you would be, you should have started yesterday, My second answer to you would be you should have started today. Reason I say that, I'm looking at the big picture of dollar cost averaging. Now that we have our when to start investing, next question would be our what. What are we going to invest with? This is up to you guys. Let's say you're working with $1,000. I would not invest in more than 2 cryptocurrencies. Let's say you're working with $5,000. Maybe look at the top 10. If you're working with $10,000, maybe top 20. I would not go beyond top 20. Reason being is you want to be as safe as possible. Right now, Bitcoin and Ethereum, we all know Bitcoin is here to stay, and I think Ethereum is here to stay as well. Everyone has different opinions, but these are just my guidelines. So if I had $1,000, I would go with my top 2, let's say $5,000, maybe my top 10. And if I'm working with $10,000 as my dollar cost averaging, I would not go beyond my top 20 cryptocurrencies. There are a lot of coins that you can choose from, your Polkadot, your Binance, your Solana, Dogecoin, Polygon, and so on and so forth. So keep that in mind. This is our what. What are we going to invest it in? Choose wisely. Now that we have our when to invest, that we have our what to invest in, let's quickly determine how much we should invest. Remember, never invest more than you can afford to lose. Not just Bitcoin, in any sector, in any markets these days. We all know what's been happening lately. So the good rule of thumb I love to follow when it comes to investing, never invest more than 10% of your yearly income. So let's say you make $50,000 a year. $50,000, 10% of that is $5,000. Out of those $5,000, you can allocate certain percentages in different things. You can invest in real estate, you can invest in stocks, bonds, cryptocurrencies, and a lot of people like precious metals, such as gold and silver. There's nothing wrong with that. I like to base my investment strategy on my income. So 10% goes to a side, and then out of that 10% I would allocate into different things. I personally hold real estate, obviously. I hold cryptocurrencies. I hold stocks. I don't have any bonds because I'm still young, but that does not mean that I'm not going to have bonds in the future. And I do have some precious metals. You never know when the markets are going, where are they going, and what kind of turns are going to happen in the near future. So never invest more than you can afford to lose. Choose wisely and diversify your portfolio. Now that we have determined on what to buy, how much to buy, and when to buy, we are at our last point, where to buy. I promised you at the beginning of the video, I'm going to show you a platform that I use, and that is Coinbase. We're going to log into Coinbase, and I'm going to show you my selections, what I'm buying, how much I'm buying, and how often I'm buying. I've seen a lot of people use a lot of different platforms, and there's nothing wrong with that. I personally like Coinbase. I've been using Coinbase since 2016. I've seen people do it on Binance.com, Crypto.com, and one interesting platform, which I'm going to do a video in the future, is I Trust Capital. I Trust Capital is a platform where you can purchase cryptocurrencies through your Roth IRA. Roth IRA crypto, tax-free. Remember that. But my choice is Coinbase. So let's go ahead and sign into Coinbase, and then we'll go ahead and go from there. When we go into Coinbase, Coinbase even has a dollar cost averaging strategy. When is the best time to buy crypto? No one knows for sure. But however, rather than trying to time the market, many smart investors use dollar cost averaging. It is simple strategy, just invest the same amount every week. And as we see here on this chart, you're going to get some lower prices, some higher prices, but it'll all even out. And a fun fact, the result, over the past 5 years, buying Bitcoin every week performed better than trying to time the market 82% of the time, according to Coinbase. Very interesting. So are you ready to invest in dollar cost averaging? Absolutely. So let me log in. Let me show you what I'm buying. Here I am logged into my Coinbase account. From here on, it's very easy. All you need to do is click buy now right up here in the left-hand corner. Now we need to determine what are we buying. For me particularly, I'm sticking with the top two. Bitcoin and Ethereum are my choices. Now that I have chosen Bitcoin as my option to buy, we are presented with this screen. And if we look at this screen, right here at the top right hand corner, we have an option to select with the arrow. One-time purchaser, we're going to hit this arrow down here. We are presented with this screen, order types, where we can choose one-time order or reoccurring buys. Recurring buys basically means you can set up automatic daily buys, weekly buys, bi-weekly, or even monthly. So I'm going to select this option. Now that I have selected that option, choose frequency. As we see here, we can do daily, weekly, 1st and 15th of the month, or even monthly. I'm going to choose weekly as my option. And now we're presented with this screen. Up here, weekly is my choice. My choice of crypto is Bitcoin. And down here, you have a few options how you're going to pay. You can do wire transfer, bank transfer, or even debit card purchases. I'm going to type in $50. That's exactly what I'm buying every week for my dollar cost averaging. And from this point on, all I have to do is hit place order, and I'm basically buying every week $50 of Bitcoin. $50 of Bitcoin every Monday. Every week, every Monday, $50 automatically is going from my bank account into my Coinbase, and I'm buying cryptocurrencies. Now that you know my dollar cost averaging strategy, this is what I'm doing. This is my own doing. This is my choice. I will alternate between Bitcoin and Ethereum. That is my strategy. Now that we understand our 4 points of dollar cost averaging, in conclusion, dollar cost averaging is a potent investment strategy for beginners and the less technical inclined investors. As discussed in this video, the probability and the mistiming of the market using this strategy is very low, and the risk resulting from emotional-based investment decisions are reduced. There you have it, guys. This is my video on dollar cost averaging. Remember, no strategy is perfect strategy, but this strategy is my strategy. $50 weekly on Bitcoin and Ethereum, alternating between the two. Invest in yourself, invest in your future, choose your plan, invest wisely. Thanks for watching again, and hope to see you back soon with another crypto video.